There's the disclaimer. Again, not going to read it the third time, but it does apply equally to this deal as it did to the other two. And we're going to stop there at the top so people can take a little bit of a look at it. Not as big as the last deal, but still a good sized deal. And now let's get into the notes. This was kind of similar to the last one. I don't think the seller and the broker were that great at giving Jacob the kind of information that he would need to really get a handle on this. So notes were a little thin on this, not because of our proteges, but because of the information that's being given to them. So this business is a flooring company. Products or services identified in the submission form as flooring and installation. Market segments were identified as government buildings, high-end residential homes. Revenue breakdown, commercial 75%, residential is 25%. One note, the submission form only referenced flooring, but you go to the company website, they also list window covering, staircase remodeling, kitchen and bath remodeling. I'm assuming that that's a pretty tiny sliver of their business because it was identified as a flooring company. So that'd be one question they want to get sorted out a little bit. Exactly how much of the overall business is flooring. This is located in a large metropolitan area in the U.S. Midwest. It was founded 45 years ago, been around a long time. Trading area is local only. Business has been for sale unknown amount of time. It was not addressed in the submission form. We did get an ask price, however, and that was $2.5 million. The property is owned by related parties. It's optionally part of the sale, but no price was given. So you can pick up the business or business and property. It's up to you. They do operate from 2 locations. At least one of them is leased from a related party, potentially both of them. It didn't specify. One of those 2 locations is a warehouse. The other one is a showroom and a corporate office. Always nice to see these businesses with a showroom. Great sales tool. Ownership story. It's owned by Keith and Sean. Both are in their 60s. Both are baby boomers. They split the ownership. Each one of them owns 50%. Keith inherited the business from his dad, and he's been active in this business since he was 16. That's a long time. So Keith is active, but you know what? He is looking for the door. He wants an immediate exit. I should have put it in quotation marks. He's done was the way it was described. So if we're assigning motivation to this deal, on Keith's 50%, we got to say it's pretty darn high. Sean is also active, but willing to stick around for 1 or 2 years to help with the transition. He does not quite have the passion for the exit door to the same degree that Keith has, but yeah, he definitely wants to retire. So that is the motivation for sale, retirement. Keith right away, Sean in a couple of years. The sellers are still critical to this business. I did not see a number 2 identified to manage the business post-sale as they make their way out the door. And Sean very well might have realized that is the way it's going to come across to a buying group, which is why he has pledged to stick around for a year or 2 to help with that transition, find the GM, get them acclimated properly to the business. 25 employees are working in the business. They operate 10 surface vans, trucks. Both Sean and Keith are still active in sales. Q4 is their biggest quarter. That's when the big government projects come through. So again, we're doing an extrapolation here based on 9 months of results. I just did the straight projection, but just the same way with the microphones, there could be some seasonality in there. 70 to 100K is typically paid in cash and not on the books. There was no explanatory material on that, whether that's 70 to 80 represented sales, your profit, not really sure. But as soon as you see people, putting stuff off the books for their own financial benefit, then you're wondering, whether the numbers that they give you are also kind of doctored in some way for their financial benefit. So it always sort of strikes me as interesting when sellers admit this, that they're perfectly fine, giving fraudulent numbers to the government for tax purposes. None of us like paying tax, but at the same time, if they're trying to save taxes to their own financial gain, maybe the numbers they're giving us are going to be subject to the same treatment. Not necessarily true, but at least a thought in our mind when we hear people say that. Sellers are willing to officially take a 50% seller note. I think Jacob has the feeling that they might potentially go a little higher on that, which is good news. Commercial flooring is their fastest growing segment. They haven't been pushing an SBA deal, but they are open to the idea. I did try and check out their online reviews. The Google review was 3.6 out of 5, but just a handful of reviews, less than 10. I can't remember the exact number, but it might have been around 5 or 6, so definitely not indicative. Website is, I would say, average, lots of information. Photos weren't terrible, but they could be better. So I would characterize the mud score in this deal as average. Keith's motivation, yeah, super high, but no real distress or urgency noted from either owner. So that's the notes. In terms of the numbers, there was no add backs provided on this deal either. So didn't get any real good add backs in any of the 3 deals this week. But these are the numbers. Jeremy, taking a look at these numbers, so you're looking at deals all the time. You're looking at them every day. What sense do you get when you take a look at the numbers in this deal, and what's the overall appeal of this deal for you based on those numbers? Jeremy, are you there? Can you unmute?
I can go if he's on a call.
Okay.
So interesting deal. I think it's doable potentially. I like the industry. There are a couple of new proteges on the welcome call before this that were into this space. Guy from Dallas, don't know if he's on the call, who owns a flooring company. So this would be a really good deal for him. I think I wouldn't go SBA on this deal because they say they're going to take a 50% selling out, probably take more. You've got probably $500,000 that you can get out of the balance sheet as a closing payment between the AR and a bit of the inventory. I don't know what that $125,000 is due from a related party, but let them keep that. Just carve that asset out to them. They can collect on that as and when. You can fund AR and inventory, so you can probably get about $500,000 out of that. So would they do a $500,000 down and then a $2 million note? I think at 2.5, it's a 5x multiple, isn't it? I think if 2 million of it is seller finance, I think that's probably okay. I think on average, if this was an SBA deal, you'd probably be looking at around $1.5 million or so. And again, look at the AR. So the accounts receivable on this business is about 350,000 into 4067 times 365. So you've got about 32 days of AR. You've got some payables and customer deposits and lines of credit in here as well. But look at the cash, $56,000 of cash on a $4 million B2B is scary. So you're gonna need some additional money, I think, into this deal to do anything around. And they've lost $1 million of revenue in the last 12 months. So, we're at 4.7, then peaked at 5, down to 4 million. The profitability's suffered as well. So
that is a projection, Carl, in terms of 2022.
Is it? Yeah, it's 9 months. Yeah, so
that's a projection on 9 months results.
Yeah, so you could probably get the October and November numbers as well now, just to see kind of where they're at. And I don't know how seasonal the business is. This business might have a huge uptick in Q4.
They did say that. They did say that it was Q4 oriented because of the government type stuff. So
yeah, so it could be up to 4.5 maybe as revenue. So again, it's got some flies on it. It's not it's not like a slam dunk for me. I do like the industry. It's reasonably stable, although we've kind of had that drop off. Massive lack of cash. I think working capital's probably 150K low as well. Those customer deposits concern me. Plus, they've got a $295,000 line of credit. So they're using external money to fund this business. So if you add up the customer deposits and the line of credit, we're talking nearly $600,000 of other people's money have propped this business up, and it's only got $56,000 of cash in the bank. So that worries me a little bit. SBA wouldn't do this deal, in my opinion. Could you raise another $500,000 and do this on a big $2 million note? I might be interested around that kind of level. I think, if they want half the money down, then, I wouldn't do this deal. So very borderline for me.
Yeah, we said that there's potentially $500,000 on the balance sheet, but when you take a look at the fact that the line of credit probably secured against some of those assets.
Maybe. Yeah, so you have a problem with that.
Yeah, we got vehicles that are also, vehicle loans. So the vehicles have also been pledged for security. So obviously we'd have to refinance that probably. Could we get more than that? It depends on loan to value ratio, et cetera, but definitely an issue.
One of the other things you could do, this might be worth a cheeky annuity offer. Right, what do I mean by that? So you got someone that wants to leave immediately. So if he was the only shareholder, he'd probably take a 10-year note on this deal straight away. The other guy, what you might be able to do, you might be able to go in and say, look guys, this business needs some capital. It's a bit of a turnaround situation. I could raise $500,000, but I'm going to need that to kind of fix some things. So they might get 100,000 at closing as a gesture, right? It's a broker deal. This probably wouldn't work. Is this a broker deal?
I don't
Yes.
get it.
Yes, it is.
Oh, right. Okay. Yeah. So, yeah.
And that's it was a broker deal, but there was no ad backs. I remember kind of scratching.
No. So, yeah. So, $2.5 million, the broker's fee is going to be a couple of 100,000. So he's going to talk them out of this, but, I'll give you my idea anyway. What you could do is say, 100,000 down, just as a gesture. And then the rest of it is on like a 10-year note, 240 a year. Maybe you could offer them a bit more because he's mostly an annuity. Leverage the balance sheet to get cash in to just tidy things up a little bit. And then what you could do is basically have a deal with the retained shareholder, have a deal where you could refi the annuity in, say, 2 years and buy him out. So what you've then got is a 2-year runway with no risk to improve this business, grow it, make it more profitable, clean up the balance sheet. And then if you get to a point in, say, 2 years, what you could probably then do is do an SBA 7A loan on it, and you wouldn't need any buyer's equity to do it. So if you own, you might do a deal, Adam, where let's say you just buy half of it, right, on an annuity, keep the other guy in with the other half, and then in 2 years' time, you could buy him out on an SBA deal. You'd only need, if you set the terms down and said, hey, I'll take you out for 1.3 million or whatever in 2 years, if you improve the business in that time frame, the SBA would be all over that. That'd be a really good deal for them. And you wouldn't need any equity to do it. They'll just lend you the money on a 10-year note. No PGs, no equity. That's what happens if you own half of a company you want to buy a partner out. It's really good deal structure. So that might work. I think the seller psychology is a key to this deal for sure. You've got one seller that's done. It's like what we call the whiskey and the revolver guy. He's there, probably depressed, needs to get out. Mm-hmm. Why isn't Sean doing this deal? Like, if I'm Sean, I'm saying to the other guy, hey buddy, I'll buy you out. I'll buy your 1.25 million over 10 years. I'll pay 125,000 a year, or maybe 200,000 a year for 5 or 6 years, getting you out. And then if I'm Sean, I spend 2 years fixing it and scaling it, and then you sell out. Let's say you sell it for 4 million in 2 years, and you still owe the other guy 700K. You call him in 2 years, and instead of giving him 700K for 4 million you just made, you say, hey, do you want to carry on at 200 a year, or do you want 500,000 now? We'll call it quits. He'll probably take the money. So you could probably make $3.5 million from this if you're Sean. So I'm intrigued as to why he's not doing that. And that's the only danger when you've got two partners and you offer an annuity deal and one wants to stay for a bit. You make the offer and the other guy says, well, I can do that. Let's go. I don't need to go to a bank. I don't need to do a lot of complicated due diligence. You can say, hey, I'll give you the same deal. And better the devil you know, right? So a couple of options there. But yeah, borderline for me, unfortunately.
Yeah, so I submitted this a couple of weeks ago. After I submitted this, Sarkis went over a little bit with me, and he's saying a lot of the same things that you guys were saying with the low cash. And I asked him about the low cash. I was like, you don't have working capital. He said, yeah, we use credit and then get the accounts receivable and then pay it off. And so I don't like the low cash situation. I haven't talked to the owners yet. I've been just going through the broker, asking questions, getting answers. But I think I'm going to be meeting with them. It's really right around the corner from my house in Maryland, and or Maryland, as Carl would say, because he has fun in Maryland. So I'm meeting with them for the first time. I think tomorrow, possibly. So I'm going to ask them a couple questions about what's going on, and speaking with them face to face, that'll be good. I can get some more answers. But yeah, it's that sounds pretty complicated the way you're describing what could possibly work. Sarkis says ditch this, so I was kind of going on that path of ditching it.
Yeah, I think like for me, I wouldn't red light this deal. I would I just go in with an annuity deal.
Mm-hmm.
I would go with a straight annuity deal. It's if you look at 10 deals like this and you just make 10 annuity deal offers, one of them is going to say, yeah, you know, Zafrina had it on a deal we looked at a few weeks ago, and that was in a much stronger financial position to this deal. So I would do this deal on an annuity basis. I think the challenge you're going to have, and somebody mentioned it in the chat. Let me find it. Who mentioned it? It's a really good point, actually. Paul Tamale said, because Sean isn't Carl, doesn't know how to do it, which is true. He probably has no idea that he can do a deal like this. But when you sent it to him, he's all of a sudden going to know exactly how to do it. So I think that's the danger. So I think I would absolutely make an annuity offer on this deal. But I think what will happen is Sean will end up doing it. So then you ask yourself, well, why don't you call Sean and say, hey, Sean, let's do this together. I'm the deal maker, you're not. Let's do a deal. Let's convince the broker and the other guy to do a 10-year note. And then let's open the business. And then I'll buy you out for 1.5 million in 2 years. And if I can't pull that off, I'll give you the business back. Something along those lines. So you're still going to make money as the owner of that business, co-owner of that business for the next 2 years. And then as long as you can turn it around and fix it and get some growth back into it, the SBA would do this deal. They'd let you buy Sean out that 50% at that valuation. Wouldn't have to take zero risk on that whatsoever. So that's one thing that you could do for sure. But then it's all about the relationship. Look at your all-out score with Sean. Like, how strong's your relationship? Can you value map to him? He's the key to it. The other guy's done. The guy will just walk away and give you the keys, right? But it's Sean that's the key to this.
And he wants to stay on. Sean wants to stay.
You get Sean on side, he can sort the broker out, right?
Yeah.
You don't get Sean on side, you've got to deal with the broker in this deal. And the broker's going to want 200K on this deal. You can raise the 200K from the balance sheet, but I think you're going to need that money to clean it up. That's my thoughts. So, is it a too hard bucket deal? Maybe, but it's not a difficult industry. You've always got the shareholder dynamics, you've got the broker, there's some financial flies on the deal. It needs cash. But for the first time, John, in human history, I'm 3 red lights this week. The first one, probably 1, 2, 3 in order, but I'd still green light. I'd still green light this deal. I'm a low green light on this. This is definitely worth a conversation. In fact, I'm probably a higher green light than the second deal, if I'm being honest. I think you've got more chances to do this deal. Deal 2 needs funding, no question. You need to talk to a bank on deal 2. Deal 3, I don't think you do. I think you might have a chance. It's worth a couple of hours on it to see for me. I think if you kick this deal to the curb, Adam, I think you'll always be wondering what happened to it. Did they take an annuity deal?
I have no idea how to structure the annuity deal. I mean, hopefully one of you guys could help me out with that. I have no idea where to go. And what
I would just say, I would turn around and say, I'd like to make an offer for your business. I'll pay you $2.5 million, 0 down, $250,000 a year times 10. Yours sincerely, Adam. That's your annuity offer.
That's it.
That's it. Simple. See what comes back. But the other idea is, if you can get on a call with Sean separately, walk him through this, but make it sound really, really complicated. He's going to think, I don't want to do that on my own. I need Adam as my deal maker to partner with me. And then you and he can sell the deal to the other party. He's going to take it all day long. Oh my God. It's like, hey, dude, you're done. You don't need to come in tomorrow. By the way, you're going to pay you $125,000 for the year. Boom. He'll be dancing around the office before he leaves. And then once both of those guys are sold, who cares what the broker thinks?
Yeah.
They could fire the broker.
I mean, I could see that. I could see that working. I mean, those guys are, late 60s. I'm guessing they're about 67, 68 years old. So they're not like real old. They may do a 10-year.
Yeah. And if you check most terms of broker contracts, broker fees are paid at the timing of seller money. So if you get both sellers to sign off on that deal and they say to the broker, well, hey, look at page 3 of the contract, buddy. You're going to get 5% of our $250,000 a month. That's what the contract says. You get both sellers on side on that deal structure. Doesn't matter what the broker thinks. You can just pay the broker out the business cash. That's what I would do.
Okay.
The more I talk about this deal, the more I like it.
Yeah. Well, I'm meeting both of the owners, both of those guys, I think tomorrow afternoon. So I'm going to feel it out with them. And maybe I'll make them an offer.
Yeah, so I'm going to go green light 23 on deal 3, and then I'm going to go 132. I'm going to go 132 on this deal.
For people who are new, the 132, the 123, we rank these deals against
Order of preference.
And so, usually you see a little bit of variation here. One seems to be the consensus choice, but
Alex De Silva, 3-2-1, bucking the trend. I like it.
not universal.